Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets start the week on a positive note, snapping a two-day losing streak.
WTI oil prices rises about $70 a barrel for the first time in more than 3 years as Donald Trump's decision on Iran deal draws near.
The rupee weakens to below 67 to a dollar. Bonds rise after the Reserve Bank of India announces bond purchases of 10,000 crore.
Nestle will pay Starbucks just over $7 billion to market and sell Starbucks coffee beans at retail stores and in certain capsules.
And Essar Steel's lenders may give New Metal and ArcelorMittal India a window to repay their outstanding dues to become eligible bidders. That's a Bloomberg Quint exclusive.
Quick check on how the markets have been faring. A positive start to the week, as we mentioned. Neeraj is here with a closer look. Neeraj.
Hey guys, yeah, so good start to the week for sure, and banks leading the way, save for HDFC Bank, which has a minor hiccup today, just about 0.5% down. Axis, ICICI out of the numbers trading at the high point of the day. State Bank of India participating as well. So the Nifty Bank is doing okay, about 175 points higher, and that should augur well for the markets by and large. It's a heavyweight that is doing well, and IT is not doing too poorly. So you have a potent mix of two sectors which are not contributing negatively and contributing positively, respectively. Therefore, adding to the market weight. Some commodity names have done reasonably okay. The likes of Hindalco, I think I saw, was doing reasonably okay for itself. But I think two pockets stood out. One was the hotel space. Taj GVK is a tiny tune, but came on a report and went up. But Indian Hotels, the leader, is up about 3.5% in the session today. So pretty smart going for that bucket. And then a lot of positive and respectively negative result reactions, guys. This time today, fairly stark. So companies like BASF, Deepak Nitrite, etc., didn't come out with the best of numbers or slightly shy of what the street was working with. And each of these stocks have reacted negatively. On the flip side, SQS, BFSI, or NOSIL, very smart numbers, and the stocks duly reacting as well, 10% or something like that for SQS, BFSI. NOSIL started off about 3 or 4% higher. I don't know what's doing right now, but should bring that stock up as well, 3.5% higher. Fabulous numbers from this chemical company as well. So selectively, companies are reacting. And just for kicks, I thought, let me look at the stock price of Tata Global Beverages on this big global tie-up. No, but that isn't doing too much in trade today.
All right, we will get you the global story on that front in a little bit, but let's keep it at the home markets and look at the bonds. You've got a nice drop in bond yields finally after the Reserve Bank of India yielded and announced an open market operation of 10,000 crore. That news came in on Friday. 764, a nice drop on the yields coming in below 770. The question is whether they actually remain at those levels. Reminder, the RBI said that they will buy 10,000 crore in bonds via their open market operations. As of now, they've announced that one tranche, market waiting to see whether they continue with this, and there are regular tranches of bond purchases announced or not, and that in some ways will determine whether yields remain low or they move back up towards 775. The trend so far has been that for everything that has been announced, yields have corrected a little bit and then moved right back up. We've just put that chart for you on the screen. The various things that have been announced over the last few months. The initial uptick came, as you can see on that red little button there. That's when the government had announced its higher borrowings for FY18. They tried to undo the damage by reducing the borrowing amount. Then they came in and said that they won't front load borrowings for the first half of FY19. The RBI stepped in, said that we will allow banks to spread their mark-to-market losses. They changed the rules for FPIs. Through all of that, yields have corrected but come back. Now the question is whether open market operations can change that scenario or not. If it continues, then it certainly can change the scenario. Bank of America Merrill Lynch coming out with a note just minutes back on what they think is going to happen from here on. And Indranil Sengupta writes in that note that the RBI has finally decided to do an open market operation purchase to cool yields. We continue to expect policymakers to further try to comfort sentiment in the GSEC market. After all, the 125 basis point yield spike since the RBI's last rate cut in August 17 is pushing up lending rates and delaying the economic recovery. Friday's announcement strengthens our call that the RBI OMO will push the GSEC market into excess demand in FY19. That's Indranil Sengupta of Bank of America Merrill Lynch.
Okay, let's talk about the rupee as well. Quick check on how the rupee is trading at this point in time. The oil's advance to its highest since 2014 is making trading in the rupee unprofitable. 61.14 at this juncture. The carry trade returns on Indian rupee has fallen to its worst in Asia. Shubhadeep Sarkar of Bloomberg News now joins us with more details on this one. Explain the math. What really is going on? I mean, oil has been the trigger.
Yes, definitely, Harsha. Oil has been the trigger. Rupee returns on the rupee by investing. So if you are investing in the US, if you are borrowing in the US dollar and investing in rupee assets, you are getting a negative return at the moment of around 3.3%. That compares with a positive return of 12%, which the carry trade saw in 2017. So basically, it's a complete turnaround for the rupee. So basically, what it makes it more unprofitable for foreign investors to invest in Indian assets. That's why we also have seen this slowing down of inflows both on the equity side and on the bond side, because when the foreign investors take out their money out, take their profits out, that makes it much more lesser when the rupees are depreciating rather than when it is appreciating. So clearly, a couple of foreign banks also have even given a call of a preemptive rate hike as part of the rupee defense. So we had Deutsche Bank now calling for a June rate hike. We have also DBS bringing forward its call to the third quarter, with the rupee supporting the rupee being one of the key reasons why they are doing that.
Was the market anticipating this kind of pressure on the currency right now?
The currency has been under pressure. It's not been that it's not have been such a big free fall like 2013. Of course, we have the backup of the big reserves this time around, but clearly the sentiment has been negative on the rupee, both on the current account, the fiscal pressures, the borrowing program pressures, all have accentuated the rupees along with the global sentiments.
Yeah, and worth just putting up the chart of the NDF futures to the extent that they indicate the direction of the rupee. The NDF futures have also moved along with the spot rupee. Those are the various maturities, 1 month, 3 month and 12 month on the NDF futures. But it all comes down to crude and what happens to crude prices. And in that context, of course, a word from the United States on the Iran deal is most awaited. This morning, Brent crude at 75.36, but WTI crude took out $70 a barrel as well for the first time in more than 3 years. Let's welcome in Vandana Hari to get a sense of whether the markets are jittery ahead of Iran deal or is there more at play. Vandana, does it all come down to what the US says or does on the Iran deal before we get a clear direction on crude prices from here?
It does seem like it, because we haven't really had any other news, bullish news. If you look at Friday's rally and then second day in a row, oil is rallying today. It does seem to be the market very heavily focused on what Trump's decision will be come Saturday. And while the fears had that of a resumption of sanctions against Iran had been built into crude prices for a while now, certainly starting January when Trump first set the deadline of May 12th. It does seem like just inching closer to the day now, with less than 5 days to go, that issue has become front and center. But there are other production or supply clamps elsewhere in the world as well. So that is also providing basically the context you have here is of a tightening market. The immense problems in Venezuela with the oil company PDVSA as well. Fresh news on that front last week too. So the market is very heavily focused on supply tightening while the outlook for demand growth still remains quite robust.
Vandana, you mentioned that the crude supply is being choked from Iran being factored in. What could that mean for prices in the near term? Do you see this upside continuing for the next couple of weeks?
It's really difficult to put a number. I see some really bizarre numbers that have been put out there, some real shock value numbers. Yes, you would expect, we have already seen it reached near 30-month highs. You would expect as the oil market continues pricing in the worst case scenario, which for now until May 12th is that the U.S. walks away and reimposes sanctions. Yes, oil will continue going up. However, I think it's important to keep in view that there might be a slim chance, but it cannot yet be ruled out that the EU allies that have been working very hard, and we heard last week there were some efforts on their part to try and forge a sort of a supplementary agreement deal with the U.S. that, whatever the additional demands of Trump, can they be accommodated in another deal? So they keep the nuclear deal intact and then have a sort of a supplementary, the restrictions packaged into another deal. Now, we haven't heard anything on that since the middle of last week, and that's partially the reason I think that the market is souring increasingly over the prospect of this deal being rescued. But, it's not completely ruled out. I think we're going to see quite choppy trade through this week. Of course, if it does seem that Trump is going to walk away, I think there is definitely scope for crude to go, several dollars higher from now.
On the flip side, Vandana, if he doesn't, what could be the downside that could come through in crude?
Yeah, that's an interesting scenario to contemplate. Look, I think there is a possibility that he postpones the decision. He gives his EU allies some more time. Now, let's not forget there is a great deal of pressure. He does want to make the peace with North Korea work as well. So, he's in the event that Iran does react very poorly to his decision, then it will again be on Trump's head that, there was a deal. It may not have been perfect. It was working, but now it's completely collapsed. So I think he and his advisors will have to weigh all those things. So which is why I think that we cannot rule out that they continue looking for a compromise while maybe kicking the can down the road a little bit. What that does for the market and for oil prices, basically it does keep the market still on tenterhooks, because no matter until what is the next deadline that is given, you would still have this situation of fear and anxiety that at the end of the next period, you could still be confronting the same situation that Iran might lose some of its supplies. So very hard to say at this point, but it's understandable that this week is looking more bullish than anything else.
We'll leave it there, Vandana. Thank you so much for joining us. Vandana Hari from Vanda Insights talking about oil prices and what President Trump's decision could mean for oil prices globally. Nestle and Starbucks are joining forces to take on other coffee players. Nestle will pay the Seattle-based chain more than $7 billion in cash for rights to sell Starbucks coffee products in retail stores and food chains. Jan Patrick Barnett of Bloomberg News joins us from Frankfurt with all the details. Jan, thank you so much for joining us. What does this deal entail?
Yeah, it's the first time that Nestle is making such a deal with a major rival in the coffee business. They're going to include the Starbucks brands in their Nespresso and Dolce Gusto capsules to sell them across the world. The move comes as Nestle is lacking competition in the US. They are quite a market leader in coffee globally, but behind Starbucks in the US. So that's a put-on acquisition that they're doing here. Shareholders seems to like the idea. They're not getting too excited. Stocks are up about 0.5% this morning in trading in Zurich.
Very quickly, Jan, what does Nestle hope to get out of this deal?
Well, as I said, they are hoping to get up to speed a little bit in the US, sell more coffee there, as this is one of the major markets that they are lacking market share at the moment. They said that they want to see positive effects on organic growth and their earnings per share later in 2019. They also said that they will keep up their current share buyback program, so this will not be affected.
Jan Patrick Barnett, thank you so much indeed for joining us with those details. That's reporting from Frankfurt on the Nestle-Starbucks deal.
All right, that could be an interesting one. Now, talking about deals, but this time back home, TPG and Manipal Health have now thrown in a preferential issue of 2,100 crore as it looks to outbid other suitors for Fortis Healthcare. The South India-based hospitality chain revised the offer yesterday. So what else is new in Manipal Health's offer, and how do these different offers stack up? Yatin Mota is here to take us through the details. Yatin.
Well, probably this is one instance wherein the bid has been revised and, probably restructured. In fact, the complex transactions that Manipal TPG were earlier proposing, this is probably a simplified version of it. Now, the new proposal from Manipal TPG Combine talks about a 2,100 crore preferential issue of shares which happen at a price of 160 rupees per share in the main Fortis Healthcare entity. Earlier, they were talking about, separating the hospitals business, infusing business, money into the hospitals business. But now they are talking about an infusion in the combined entity, which basically also houses the diagnostics business. Of course, the entire valuation of Fortis Healthcare has been put at 8,358 crores, according to the price calculations, versus the earlier valuation, which was close to 8,100 crores. Not really, things change in terms of the valuation assigned to Fortis Healthcare entity, but it's much simpler in terms of the overall transaction. They also talk about a rights issue and raising debt for the RHT acquisition moving forward. So that is something which is lower in terms of dilution versus what was earlier proposed by TPG and Manipal combined, according to analysts. But very interesting to see how other suitors also respond to this revised bid done by Manipal Healthcare.
Yathan, thank you for that. Let's move on and talk about SR. SRC's lenders are going to hold a meeting today that could pave the way for New Metal and ArcelorMittal to become eligible bidders for the company. This comes, remember, after the Ahmedabad NCLT, or the National Company Law Tribunal, asked the resolution professional and creditors to take a review at the initial bid submitted by the two partners. Vishwanath is here with some exclusive details. So what are the lenders contemplating right now?
So at this point in time, the lenders, there was a lenders meeting in the morning. Currently, there's a voting window that is open. The lenders need to vote on whether they should allow these two bidders to clear whatever overdues they have and then become eligible to bid for SR Steel or not. They need at least 75% of the lenders by value of loans to approve this proposal so that this can go through. By the end of tomorrow, the lender should be able to issue these directions to both the parties. New Metal and ArcelorMittal are then at freedom to either comply with this direction or they can challenge it in court if they feel that it's unfair of the lenders to ask them to repay the amount that they're asking. Remember, overdue in the IBC context is basically any amount that should have been paid on a certain date but was not paid, and any penal interest that may be charged on these loans that were not paid. So it's not essentially the entire outstanding, but it is a certain portion of the loan that needed to be paid on a certain date. So both these, in ArcelorMittal's case, there's KSS Petron as well as Uttam Galva loans, which are causing the ineligibility as such. In New Metal's case, however, Ravi Ruya, one of the co-founders of the SR Group, had issued some guarantees for SR Group company loans, and Revant Ruya, the son of Ravi Ruya, is somehow an indirect shareholder in New Metal. So therefore, those dues need to be cleared, and some other dues that might be pending, those need to be cleared. So the borrowers will now have to take a call. Both the parties will now have to take a call whether they need to clear this or challenge it in court.
The lenders also have been going back and forth on this, right? I mean, because there were other issues that the forensic audit had thrown up as well. Right. So will simply a clearing of dues be enough for them to become eligible?
It's a call that the COC has to take, whether they are okay with this or not, whether they can live with the regulatory issues or the criminal prosecution that is still pending in court. That's a call that they have to take, and they've decided that if you clear this, then we can at least consider your bids. Whether it will be approved or not, this is a discussion that will be taken up later. But at this point in time, whether those bids are eligible to be actually considered by the lenders or not, that is something that is going to be decided at the end of this.
All right, Vishnu, thanks so much. We'll watch to see what happens and comes out of that one. Meantime, State Bank of India Chairman Rajneesh Kumar has been defending the Indian banking system against these tags of corruption that have been attached to it. In a conversation with Bloomberg News, Rajneesh Kumar said that there is a little bit of a concern emerging within the banking sector that if bankers are questioned for every decision they take, will they actually take any decisions at all? Listen in.
We have to distinguish between the genuine commercial decisions and judgments which might have gone wrong, and if any decision has been taken with certain malafidence or there is evidence of wrongdoing, then it is a different matter. But I won't say that the corruption has been such an endemic phenomena in the Indian banking industry. But because of the NPLs, the large losses which have been incurred by the public sector banks, so many decisions are being looked into. And I'm sure that once the investigations are complete, only then we would know the truth.
That's the Chairman of State Bank of India. The country's largest private sector lender by asset base, ICICI Bank, will report numbers today. RBI's new stressed asset norms are likely to play havoc with the numbers, although proceeds from the ICICI Securities stake sale may cushion that impact. Shraddha is standing by with what the street is pricing in from ICICI Bank.
The bigger question here really is if the bank will remain in the black, or will we see a repeat of what happened with ICICI Bank, a net quarterly loss. So while on one hand there is expected to be pressure on earnings growth on account of higher provisions coming up from that RBI's new circular on stress loans, you could have some gains from that ICICI Securities stake sale cushioning at least that profitability impact to some extent. So the net profit, according to Bloomberg consensus, is seen about 48% lower at 1061 crores. Having said that, we do need to mention that there's a huge variance in the estimates of analysts, ranging from a profit of as high as 2300 crores for the quarter to even a net loss of 1400 crores for the quarter. So we will have to see what comes by. But even operationally, it's expected to be a muted quarter because if you keep aside the gains coming in from ICICI Securities stake sale, the contribution to Treasury otherwise is expected to drop significantly. On the business growth momentum, loan growth is expected to come in at about 12 to 13% because retail and SME traction continues. In terms of key numbers, now gross NPAs at December end stood at 7.8%, and that is expected to spike up to 8.7 to 11% by various analysts. Slippages, that gross slippages number was at 4,400 crores as of December, and that is expected to jump to as much as about 10,000 crores. So overall, we will be watching out for the impact of this RBI circular, the kind of slippages that come from outside the watch list, and if the management has any comments with respect to, if they have any timelines to winding up that watch list. Also, the kind of RBI dispensations that they used during the quarter, and anything with respect to resolutions, and also the CEO and MD, the entire Chandra Kochar Videocon controversy is not on the agenda, but we don't know if the chairman will allow that to be taken up. So there could be, or there could not be some comments coming in with respect to that aspect as well. So all of that is what we're going to be watching out for.
All right, Shraddha, thanks so much for that. The fourth quarter earnings season has not been too promising so far. If you look at the 20 Nifty companies that have reported so far, the scorecard is evenly balanced between the strong and the weak. But what does this imply for Nifty EPS growth for the full financial year? Jayesh is with us and he's done some of the calculations. Jayesh.
So it looks like Nifty EPS will not grow in double digit as per the data that has been released so far. Let's have a look at what we are working for so far. So for the 9 months ended FY18, the EPS that Nifty had done was 356, and the Q4 FY18 reported number, which is the 20 companies that have reported so far, they have been able to contribute an EPS of about 63.3. Now the balance 30 companies, which is the Q4 FY18 estimate, if those actually meet the estimates that have been provided on a Bloomberg consensus basis, those will contribute about 52.4 rupees as EPS. So if we add all three of them, we get an FY18 EPS of about 471.7. Now, where does this 471.7 stack up against the previous growth numbers that we have seen? So the bottom panel, you can see that if we do 471.7, that will imply a growth of about 8.8%. Whereas FY16 and FY14, we have seen double-digit growth. So going by this 471.7 number, highly unlikely that we will actually do double-digit growth for the Nifty earnings. Now let's have a look at what actually is needed for a 10% or a double-digit growth. So the FY18 EPS, if that comes in at about 480, the Q4 FY18 EPS will have to be 124. And remember that we have done just about 63.3 as the EPS. So the balance has to be reported. The comparison stands at 52.4 rupees. Now, where's the positive sign of this is that if you see the last 8 quarters EPS trend that we have seen, 127.6 is the one that we did for Q3. But what we actually need is about 124 rupees, and looks highly unlikely that the number will be clocked and we will get double-digit growth for the Nifty EPS.
Great, thank you for that. Let's talk about cement. A general pickup in construction activity and new road construction has actually revived the new road projects usually all go well for cement companies, and the fourth quarter was no different. However, volumes rose significantly, did not necessarily translate into higher pricing. Nikki is standing by with an assessment of how 3 pan-Indian cement players, that's Ultratech, ACC and Ambuja Cement, performed in the first 3 months of 2018. Nikki.
Thank you, Harsha. Well, volume push and cost optimization was a saving grace for all these players, which reported in line with estimates number. To begin with the volume growth there, well, Ultratech surprised the street with better than expected, almost in line, but then better than expected as compared to rest of this players' volume growth. We saw a good 31% kind of growth coming in from Ultratech Cement as compared to a 7 to 3% kind of growth from ACC and Ambuja. For Ambuja, the growth remained pretty much muted at 3% on account of the lower capacity utilization level, and the case was just opposite for Ultratech, which added new capacity and also ramped up the capacity utilization of the acquired assets capacities. Realization was sequentially flattish for all these companies. However, we did see good performance coming in from Ultratech Cement again. In fact, for Ambuja Cement, we saw a downtick sequentially of 0.5%. Much to it is on account of the dismal volume growth that we noticed for Ambuja Cement. In terms of the EBITDA per ton kind of performance, that is where all these companies have managed to deliver a beat. But then the highest beat again was coming in from Ultratech Cement. This was on account of the lower expenses, other employee expenses and employee expenses. In fact, for ACC and Ambuja, Credit Suisse has actually gone ahead and said that the cost pressure could actually escalate for both these players, given that the power and fuel costs have not completely played out in this quarter for these two companies. Back to you guys.
All right, thanks so much for that, Nikki. Up next, central banks don't have the tools to boost inflation. That's the word coming in from former Reserve Bank of India Governor Raghuram Rajan. We get you that exclusive Bloomberg News conversation after this break.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
What if lucky discoveries could be discovered without luck? What if the secret code to investing was no longer secret? Could the complexities of business not be so complex anymore? Decode, demystify, learn. BQ Learning. Only on Bloomberg Twint.
Back on lunch, the headlines at this hour. Markets start the week on a positive note, snapping a 2-day losing streak.
Former RBI Governor Raghuram Rajan says central banks globally don't necessarily have the tools to push up inflation. That's a Bloomberg News exclusive.
farm loan waiver also finds a mention in the GDS manifesto for Karnataka.
All right, let's take a look at how our markets are faring. Darshan is here with us with all the movers. Afternoon, Darshan.
Good afternoon, Neera. At this point of time, the markets are slowly and steadily moving higher, but the start was okay. It was average. The SGX Nifty had indicated a negative outlook, but that didn't happen. We are trading pretty much close to the highest point of the day for the Nifty itself. The Sensex is up almost 200 points. What is leading the rally? The PSU banks are doing well in today's trade. Metals are doing well. If you look at what happened with the LME commodities, what happened in commodities in China, metals did well, especially steel companies are doing well. Real estate stocks are doing well. The only sector that's not doing well right now is the pharma space. Most of the pharma stocks are down in trade. Individually, some of the stocks that I want to focus, first of all, PC Jewelers, you can't not mention that counter. It's up almost 70% in the past two, more than 70% in the past two trading session. So there is enough traction that's happening there. Metal counters, especially the steel counters, JSPL and SAIL, they are among the top gainers in the F&O space, given the fact that steel prices have inched up over 10% in the past 1 week itself. ICICI Bank ahead of the numbers seems to be doing well. It's up almost 2% in trade. What's not doing well is Wockhardt on the back of results. That is down in trade. Pharma, the companies, Strides, Lupin also down in trade. Ujjivan is down on trade because of, you mentioned the Karnataka manifesto in terms of farm loan waivers. Kotak believes that, this could affect Ujjivan going ahead. 52-week high counters like Quest, Divi's Lab, Pfizer and Merck. So the MNC companies are doing extremely well when most of the domestic pharma companies are down in the dumps right now.
Darshan, thank you for that. That's the markets for you. Let's talk about politics now. Karnataka goes to polls in 5 days from now. Campaigning has touched a fever pitch, and the Janata Dal has also promised a farm loan waiver in its election manifesto today. The BJP has already made a similar promise, prompting the ruling Congress party to point fingers at the centre, saying no central assistance has been provided to the state for farmers' relief. The Prime Minister also addressed the BJP's Yuva Morcha earlier today, promising to set up 16 Namma BPO complexes and 5 world-class sports centres across Karnataka. Former Prime Minister Manmohan Singh is also in Bengaluru today and has lashed out at his successor, saying Modi's vehement attack on opponents is unbecoming of the Prime Minister's office. But what are the key issues right now in Karnataka? Tamanna Inamdar sums them up for us.
Well, incumbent Chief Minister Siddaramaiah has been the first off the block to kick off the theme of Kannada pride. He has spoken of a separate flag for the state, questioned the use of Hindi signage in the metros, and in the most controversial of pre-poll pitches, notified Lingayats as a separate religious community with minority status. The BJP is now playing catch-up with speeches and statements on Kannada pride. Prime Minister Modi has even gone back in history to speak about the ill treatment of braves like Field Marshal Kadiyappa and General Thimmayya by previous Congress governments. Like in many parts of the country, farmer distress is a big concern in Karnataka as well. As per NCRB data, over 2,700 farmers have committed suicide in the state between 2014 and 2016. The Prime Minister has been saying in rallies that central plans like the crop insurance scheme have not been implemented well in the state. The BJP on its part has also promised to waive off crop loans and other agri loans if voted. The Congress, meanwhile, has claimed to be a pro-farmer government that combated the drought situation efficiently. Their manifesto promises to improve productivity, reduce costs, and increase price stabilization, among other things. And there is little doubt that this will be one of the key issues this election. Undoubtedly, the shortage of water is also a very big issue, whether it is in urban centers like Bengaluru or irrigation needs for farmers. As per the 2011 census, just Bengaluru's water demand was about 18 TMCs for a population of about 8.5 million, but the shortfall was 5.80 TMCs. By 2031, this shortfall is expected to grow to 10.7 TMCs. The need for water has become a political issue too, with BJP's chief ministerial candidate B.S. Yediyurappa hoping for a favourable agreement from the BJP CM in Goa, Manohar Parrikar, on sharing of the Mandovi River waters. But Mr. Parrikar was clear that this would not be possible. It is a weak point that the Congress will try to highlight. Water is such a big issue that both parties are making significant promises to improve irrigation if voted to power. BJP star campaigner Prime Minister Modi kicked off his campaign trail with a blistering attack on what he calls the 2+1 and 1+1 formula, which is big leaders and their kin getting tickets from the Congress party. His #1 target is the Chief Minister, who is contesting from Chamundeshwari and Badami constituencies, while his son Yatindra is contesting from his safe seat of Varuna. The CM is not the only one. Home Minister Ramalinga Reddy's daughter Soumya, as well as the Law Minister's son Santosh, are some of those few scions who have found place in the Congress list. In the attempt to perhaps drive home the nepotism charge, B.S. Yediyurappa's son, B.Y. Vijendra, was denied a ticket from the Varuna constituency by the BJP, though that attack has been blunted with 7 tickets going to mining baron Janardhan Reddy's extended family. With 28 out of 224 seats, the urban centre of Bengaluru by itself may not make or break this election, but its woes are high on perception. A recent IISc report has predicted the city may become unlivable by 2030 if traffic congestion and pollution levels are not brought under check. A 7-kilometre steel flyover proposed by the government to ease traffic had to be scrapped after citizens protested the environmental damage it could cause, and the BJP claimed there was corruption involved. Bengaluru's potholes are now legendary. Its lakes catch fire because of high contents of pollutants in them. A report by the CSE recently listed cities that could turn dry, and Bengaluru made it to the top 10 metros worldwide that could hit day zero, that means run out of water completely. This is one area where the incumbent government could face challenges in convincing the people of Bengaluru that enough has been done.
Moving to global politics, senior Chinese and American officials concluded 2 days of negotiations on Friday with no deal and no date set for further talks. What was the bone of contention? Bloomberg News' Tom McKenzie reports.
What this showed, these 2 days of talks, was just how diametrically opposed both the US and China are on some of these major issues. So the US producing a list of demands, including that China reduce its trade surplus by $200 billion by 2020, and that it stop its support for its industrial policy around things like automation, AI, robotics, electric vehicles. So 2 areas where China had drawn a line in the sand. The US also saying that China should refrain from retaliatory tariffs of its own. For its part, China demanded from the US that they stop this investigation into Chinese investments around sensitive technology, and that also the US lower the barriers around exports of tech to China. Again, flying in the face, really, of the political views in Washington. It's one issue that seems to unite both Democrats and Republicans, is taking a harder line on China, particularly around technology. So it seems there's a long way to go to reconcile these 2 views on both sides.
There's room for a win-win discussion with China on intellectual property, says former RBI Governor Raghuram Rajan. Speaking to Bloomberg News' Kathleen Hayes, he says trade policy should not be driven by a fear of China's dominance. Talking about central banks, he says that they don't necessarily have the tools to deal with low inflation. Listen to that conversation where they start off by talking about the changing rules of the monetary game.
We are in an environment where countries are adopting various kinds of unconventional policies. And I think this is creating a fair amount of uncertainty about what the effects of those policies are and the effects on other countries. And when monetary policy has these effects, there is the risk that it could spill over into something a lot more political. It could spill over into trade conflicts. It could spill over into something that monetary policy doesn't intend. So part of what I was trying to say is, look, we need to come clean about the possibility that monetary policy could have all these effects on other countries. We need to accept that and then figure out what is okay, what is not okay.
Are you most concerned about the impact of the policies in the developed nations, the Federal Reserve, European Central Bank, Bank of Japan, where there are still, if not at least a large balance sheet, if not still active purchases of bonds? Are you most concerned about that spilling over into emerging markets?
Well, of course, post-crisis, that has been the biggest change. That is, countries have expanded their balance sheets significantly, And that has an effect on, A, creating very, very accommodative conditions, but also creating massive flows of capital. Now, people would say, what's to object if lots of capital comes in? Well, lots of capital comes in, but it doesn't stay in. It goes out at some point. So when it comes in, you have to prepare for when it goes out. So a number of emerging markets have the concern that this flow of capital is not reliable. And so you offset it by building reserves. And as you build reserves, you're investing in low return investments in industrial countries. The net effect is nobody is really happy about these flows. We have to manage them. We have to figure out how we can use them to the best of our abilities while not sort of taking on the risk that they have.
So that's one thing you're suggesting for central banks, is that they should have some agreed basic standard of what is acceptable when it comes to managing exchange rates.
Right. So one of the concerns these kinds of policies have is that the primary way they may work is by keeping your exchange rate a lot lower than it would otherwise be. Now, once one big central bank does this, another big central bank says, hey, they're depreciating the exchange rate, why don't I do this? So there's a contagion of these policies across central banks, something John Taylor has talked about. And so the question then is this really good for the world, where everybody is trying to push down the exchange rate? Of course, we can't all push down our exchange rates because we're all doing it against each other. And the net effect is you may have a large expansion in the balance sheet without a commensurate benefit in terms of added economic growth.
Well, to a certain extent, it seems to me you're saying that central bank policy at this point is far less effective, even with these extraordinary tools and very large balance sheets and very low rates, at doing what it most needs to do, which is boost demand, boost growth, and boost inflation.
Right. I think it's fair to say that initially post-crisis, central bank policy was very good in repairing markets. After that, we've had a long period of very accommodative policy, but it's very hard to see the translation from those policies into economic growth. They may have held the fort, but in terms of boosting growth, it's very hard to see those effects. And so when you have a period of long accommodative policy, you have to ask, if it's not having positive effects, is it possible it could have negative effects? And that's when you start worrying about the leveraging of different economies as monetary policies remains really low, and the possible consequences of that leverage when in fact policy tightens.
Are you seeing examples of these negative effects right now?
Well, you see places. Now, first, look at overall leverage. Post-crisis, it hasn't come down despite all the talk about the need to deleverage. It's shifted sometimes from private sector balance sheets to public sector balance sheets. Overall leverage has actually gone up. It's also, there's a lot of leverage which has built up in emerging markets, but even in industrial countries, there are spots where it has picked up significantly. For example, in the United States, you look at covenant-light loans, highly leveraged loans with minimal covenants. These were thought of before the financial crisis as exemplifying the lack of attention to risk. They're about 3 or 4 times the size they were before the financial crisis today. So they have mounted significantly. And you can see spots like this everywhere, areas where one should be concerned that post-crisis we have leveraged a lot.
How concerned are you about China's debt?
China, of course, has been the poster child for increasing debt post-financial crisis. Now, debt, of course, is a real problem if it works as advertised. That is, it's a hard claim, and because it cannot be easily negotiated, if somebody gets into distress, it spills across the system. Now, what China has, which, for example, wasn't as easy in the US, is the government can allocate losses a lot more than, for example, it can in the United States. So even though the bankruptcy system is not as effective, the ability of the government to say, hey, you extend this loan and don't demand that it be paid back now, because a lot of the money flows through the public sector system in China, it has some of that ability. Now, eventually they want a market system to work, so they have to move away from this sense that they can fix the system when it gets into trouble. They have to let the market do a lot more. but at least at this point they have that ability and they're using some of it. For example, the special purpose vehicles that the local governments have issued, which were running into trouble, their debt has been extended almost by fiat.
What about China's need to maybe move away more significantly from export-led growth to domestic-led growth? And on some level, that's what the Trump team's complaint is.
Yeah. Well, that is in some sense, China's goal also, to move away from export-led growth towards domestic demand-led growth. You can see it that there are some factors which are helping that. For example, Chinese wages have been picking up. When Chinese households have more income, they will have more to spend. Domestic demand will pick up more. Chinese consumption to GDP is picking up slowly off, from the depths it had reached. It had reached very low levels. Now, that said, I think one of the bigger fears of the Trump administration is not so much that export-led growth policy will continue, but that the Chinese presence in certain industries will pick up significantly more, especially in the high-tech areas. So the view is if China does what it did in steel and aluminum in other industries, such as artificial intelligence, such as chip manufacturing, such as aircraft manufacturing, then whatever advantage the U.S. had will evaporate because it'll get shut out of those businesses.
Well, we know one of the reasons that China climbed so rapidly starting back in the 80s was that they did peg their exchange rate. And even though that violated WTO rules, no one really pushed hard. Now people are starting to push harder, particularly on intellectual property. Is there legitimate concern that China will tell you what it's going to do and knows what it needs to do, but will continue to do what it most needs to do, which is to keep growing its economy, whether it's exports, domestic demand, or whatever it has to do?
Well, I do think that there was a legitimate concern then about the exchange rate. I think today the exchange rate is no longer the concern. It's a more market-driven exchange rate. Of course, there is concern about subsidies that are given to these industries, about China's respect for intellectual property and whether in fact there has been intellectual property transfer either by coercion by the government. You have to share your intellectual property if you want to do business here, or whether private parties are stealing intellectual property. But I really think that there is also a difference in what China is doing, which should make the US feel a little more confident. Much easier to grow when you're in the industries which are not at the frontier, because the path for growth for aluminum, steel, etc. is very clear. It doesn't take rocket science. What they need now is rocket science. They are at the frontier. AI needs rockets. Now, the Chinese are developing their own capabilities here, and that's important, that's valuable to the world. But I think it's not going to be as easy in the past. So I'm not saying there is no reason for concern in industrial countries, but I think there are partnerships, there are ways of making this work much better. And it's not, it shouldn't be driven primarily by a fear of China. I think it's going to be harder for China to stay at the frontiers in these areas. There is room for a win-win discussion.
Inflation. You said that central banks really can't get it. They don't have the tools now to boost inflation. They just can't admit it. I think we see an example of that, and perhaps in the U.S. Unemployment falls to 3.9%, hasn't been that low since the year 2000 at least. Wages just not accelerating. Right. They are flat. They're tepid.
Right. So we are in a new world where earlier the fight for central banks was against high inflation. And so we put these inflation targets for all the central banks, which convinced people that the central banks would be tough on inflation. Unfortunately, we have the opposite problem now, that inflation is in many cases a little too low. The central banks want to boost inflation. We really don't know how to do it. We don't have the tools that allow us to do this in a reliable way. And as a result, you have all these extraordinary policies which have, in many ways, marginal effects. After 8 years of QE, we have got inflation to what? About 2%. So the point here really is that we don't have too many answers to low inflation, as a result of which we have to be careful that we don't focus too much on that as the be-all and end-all of central bank activity. If inflation is low, well, try and make sure it doesn't sort of start getting into serious deflation. But you really have to wait for time to heal matters and other policies to kick in to get inflation back up.
Then do you support the Fed's move to be hiking rates when although inflation has briefly touched the target? Do you think this is the right thing to do?
Well, it is precautionary in some ways, right? So one of the problems, of course, is we've seen many years without high inflation. That doesn't mean that there isn't a magic moment when all the labor markets across the world that are in competition tighten. Japan is tight, the euro area tightens relative to where it is, and then suddenly, competition from workers elsewhere doesn't hold down wages, and you start seeing wages move up much more sharply. One of the fears is that the world may change in a more rapid way than we think, and you don't want to be seen behind the curve at that point. So I think some normalization is warranted up to a point where things, are more neutral, at which point you pause and see what the effects are.
BOJ, are they right in continuing to pursue an aggressive monetary policy? They were just a couple years ago still in deflationary territory. They're halfway towards their target. Are they succeeding, and should they continue, or is there a risk?
Well, they're sort of, in some ways, in a tight situation, right? If they say we really don't have strong tools to move us much further down this road, they risk people sort of saying, oh, they've given up. And then inflationary expectations collapse once again. So I think they really have to do what they're doing and continue doing it, and essentially keep saying, we will get there. And in the meantime, the rest of the economy sort of does what it does. Perhaps some of the third arrow that Prime Minister Abe has promised for a long time sort of kicks in a bigger way. But growth picks up for a variety of reasons, and global reinflation helps Japan also. So basically, continue along this path and hope that other things also kick in.
Former Governor Raghuram Rajan. Out of time on the show. Thank you so much for watching us today.
Countdown is up next.